In this episode, we're going to dig into Bitcoin. We've got a Bitcoin expert going to talk to us about all the things you need to know about Bitcoin. Really excited about this one. Let's jump in. Hi, everyone. I'm Darren Mitchell. Welcome to Control and Compound. With me today is Christina Wyatt, wealth coach at Control and Compound Financial. Hey, Christina, how you doing?
Hey, Darren. I'm doing great. How are you doing?
I am doing fantastic. Really excited about this podcast.
I am too. Before we jump in, though, I am going to, and we bring Jesse on. I'm so excited. I just want to say that this, as a disclaimer, this podcast is for educational purposes only. We are not accountants or Bitcoin specialists. We're not offering investment or taxation advice.
And that's why you're the compliance officer. I love it. Okay, so we're going to introduce you to our guest, Jesse Berger. He's an author, independent consultant. He wrote just absolutely an amazing book. Christina and I have both read it, Magic Internet Money, a book about Bitcoin. And one of the things I'm really excited about, he's Canadian. So let's bring on Jesse. Jesse Berger, welcome to the show.
Thank you so much for having me. I'm very happy to be here.
We're excited. We Christina and I were reading your book and we were calling each other going, did you see this? Oh, what about the Monopoly money? Oh, what about this? What about this? So yeah, no, we're really excited. So Jesse, before we jump into Bitcoin, tell me about you. How did you discover Bitcoin? What's your background? I assume you were born, you raised on Bitcoin, always wanted to be a Bitcoiner since you were a kid. How'd you get here?
Yeah, Bitcoin, it was in my blood and in my head before I even knew it. I started my career in 2006 in retail banking. I worked as well in full service brokerage, in wealth management, doing, helping manage high net worth portfolios for individual and corporate investors. I went and got my MBA. I've done management consulting. I ended up the 2 years before I sort of went full-time into Bitcoin, I managed one of Canada's large insurance companies. They run market research programs where they sort of survey their customers to get, insights on their customer experience. And I, helped that insurance company run surveys in Canada, the US, and Asia, and help them generate the reports and give all the data. So I have a little bit of a broad range of experience. But certainly a lot in the world of banking and investing. And I heard about Bitcoin as early as 2011 because I was already very interested in the concepts of sound money, having been exposed to the faults of our current fiat monetary system at the outset of my career during the financial crisis. And basically that event sort of sent me on a path of learning that there's the school of economics and money that you learn in university. And then there are other perspectives that are not always presented to you and that are maybe a bit more obscure and harder to find out about. And I found out about those as a result of the crisis. And that shaped my view of money and finance and economics. So I ran into Bitcoin in 2011. I'd heard about it. I had kind of wanted to buy it, but I was just a stupid banker, for lack of a better term, and had no idea how to go about it. And Bitcoin went from like $1 to $50, and I thought, okay, I missed the boat. It's over. Long story short, I ran into it again in 2017, and that's when I started to get my hands dirty in terms of actually buying some and experiencing what it was like to send Bitcoin back and forth. And just actually set up a wallet. And at that time, the infrastructure was much more advanced, and it's even more advanced today than it was then. So it was much easier for, a dummy like me to get started in 2017. And once I got into it, I started to put a bunch of the puzzle pieces together to figure out why Bitcoin is such an important discovery and invention for humanity.
I love it. Yeah. And I don't think you're a dummy. I saw your background and what you did, and your Ryerson MBA. Ryerson's a great school. I was going to go to Ryerson for my MBA if I didn't get into St. Mary's, but no, I'm just kidding. Great school. But you talk about Austrian economics. I remember. So I have an economics degree before I did my MBA, and when I joined the Infinite Banking Nelson Nash Institute, it's all about Austrian economics.
Right.
And Nelson Nash, one of my mentors, interviews you to get accepted to this program and stuff. And the first question he asked me, you have an economics degree? Yep. How many classes in Austrian economics did you have? Zero. How many times did a prof mention it? Zero. Okay. And
Yeah,
he
sounds
just
about right.
was dying to ask me that question. So we get all kinds of questions about your book, but I got to tell you, I don't know how many words you have in here. It's not a huge long book, 150 pages or so. But I gotta tell you, I think the three most important words, we always talk about three most important words being, we want to control it, we want to multiply it, we want to compound it. But I think the three most important words, or the best phrase I've seen in the book, is just the back cover. What is money? I absolutely love that. I assume that was intentional. So let's just have that conversation. What is money, and where were you going with this?
Yeah, so just to the point you made about it being intentional, so that you and your listeners know, that whole book, in my mind, it's a work of art, and it's a work of art from front cover to back cover, and my fingerprint is over every inch of that book. So that was very much intentional. The what is money question, it's something that on the surface seems very simple, but it's actually pretty profound once you really start to dig into it and try to understand it, because there are a lot of layers to the concept of money. But money is meant to be relatively straightforward. It's overly complicated today, but money is just meant to be something, you can use to trade with, that you can save with, and that you can measure value with. And that's it. And that helps us to have a smooth functioning economy, and an economy that efficiently allocates resources, so that, if I have one cow and you have 12 chickens, but my cow is only worth 6 chickens, I can't give you half a cow. How do we create a smoother transaction so that I don't have to waste half a cow or end the value of that cow? So in simple terms, money is about just creating a more smoothly functioning economy.
Yeah, portable, divisible, stable,
all the
limited supply, all that
all
stuff.
that stuff. Absolutely.
Yeah, no, I was reading while reading the book, I think you do a great job in kind of going through what is money, and what are the problems that we're seeing with money, and how the current systems run, right? It's definitely not as efficient as it could be, and there's issues there. And you talk a lot about Bitcoin being the one to replace this, or assist with fixing this problem. So let's go back to basics. What is Bitcoin, and why Bitcoin?
Yeah, well, there's no one simple answer to that question, other than to say Bitcoin is money. Bitcoin is, as Satoshi put in his white paper, electronic peer-to-peer digital cash, or electronic cash, pardon me. It's simply a way of us dealing with each other without someone else coming between us and forcing their will upon us, right? If I want to send you $10 because you bought me lunch, we can just do that. I give you the money, you give me a snack, you give me a sandwich. Nothing has to come between that. Why would we need a processor in the background for every single transaction? Why would someone have to say, okay, well, Visa needs to take 3% of every transaction just because we have this infrastructure? That interrupts and takes value away from the actual producers in the world. Money should be a public system, a public good. I call it a public good. Some people might argue whether or not that's a correct term, but the idea that it is something that is available to all equally all the time. No one can take it away from you. No one can dilute it. If you work and earn money, you keep the fruits of your labor, and that's it. You shouldn't have to worry at night about, okay, I've earned this money and now my pocket's on fire. I need to maybe get rid of it because I know it's going to be devalued. It's yours. It's simple. It's clear. Bitcoin, in effect, clarifies and I guess fixes is sort of a term we use in the world of Bitcoin, that quote Bitcoin fixes us. It fixes a lot of those problems that we have with the current dynamics of money.
Excellent. And again, Bitcoin's the one you hear about the most, but why Bitcoin versus all these other different kinds of coins, Dogecoin, Lithium, Ethereum,
Sure.
or whatever? Why Bitcoin versus the other cryptocurrencies?
Yeah, so Bitcoin solved a real world problem. It solved the problem of trust. Again, we mentioned, if I swipe a Visa card, you're paying a 3% fee. You have these financial institutions in the background that are actually executing the transactions. And, if they feel like it's saying, well, maybe I don't want to carry out this particular transaction or that transaction, or maybe the financial institutions will allow someone to, about fraud with check kiting and all kinds of things where you can spend more than is maybe available. Bitcoin solved this problem in a very unique way with proof of work, which is, sorry, I'll get a little bit technical on your listeners. It's the engine that makes Bitcoin go effectively. So maybe I won't get technical. It solved this problem, and it takes away everyone in between. And it did it by creating something that is that is absolutely scarce. So everyone knows about those 21 million Bitcoins. You can't, creating digital scarcity is a one-time event. You can't create it over and over and over again, because then you're duplicating something that isn't meant to be duplicated and can't fundamentally be duplicated. Sorry, I know that maybe sounds a little out there. Again, it's difficult to explain Bitcoin all the time. But it solved this problem. And with all these other coins, they're effectively trying to come up with solutions to problems that don't exist. And they're recreating a new branch of economics without solving anything meaningful. That's the big sort of lesson I want to impart. But again, it's difficult to describe how and just off the top of my head. Sorry, I apologize. It's a very tricky question. But yeah, you're coming up with a lot of these coins. They have a lot of style, I would say, but not a lot of substance, is a way of putting it.
Do they have the cap as well at that 21 million? Are they capped, or?
Some do, some don't. And it's not right. It doesn't have to be 21 million. It could be any number that they're capped at. But let's look at Ethereum just as a very quick example. They just went through a process whereby not only did they change the engine while the plane was in flight, they switched from what's called proof of work to proof of stake. So they basically took the innovation out of it to begin with. But they also, at various stages along the way over the last bunch of years, have changed the monetary policy. So how many coins are issued and when. And if you don't have clarity and certainty on the monetary policy, you create uncertainty in the economic outcomes that result from that particular money. So again, Bitcoin is sort of this one-time thing. Every other coin that came after Bitcoin had the advantage of knowing how Bitcoin worked. And also, the other part that sort of makes Bitcoin very unique, it had what I would call a fair distribution. And what I mean by that is, when it came out, it was worth absolutely nothing. There was no infrastructure built up around it. The people who used it, who mined it, they were expending computational power. They were expending actual resources, energy-intensive resources, for no compensation to try to see if there was actually something to this experiment. And so Bitcoin's eventually someone accepts it for a penny per coin or 5 cents per coin, and it slowly increased in value over time. It's not that any of the people who were buying it at the beginning knew that, it's going to shoot up to 10,000, 20,000, whatever, what would you have dollars in the future. They were taking a chance in a true sort of risk-reward fashion of using this brand new technology, helping it proliferate, helping it grow, helping it become more resilient and more stable. And so it is the only really fairly distributed coin that exists as well. So there's a few facets that contribute to making Bitcoin unique. Again, I apologize. It's a little tricky to get it right, the explanation always. But it's very much there, and it's something that is a key consideration when you're looking at this world.
Yeah, it's tricky to talk about, I find, but it's pretty exact when you look at what it does. Like, it can't change things. It does exactly what it says. You know, it's got, when I'm reading through, it's got the ledgers, it's got the miners. It can't stray from what it has to do. But when we're trying to discuss it, it's hard to kind of wrap your head around exactly what is happening. I know you say miners. I know there's people out there not digging holes out there. Yeah. There's definitely, it's a different type of miner, for sure. Can you kind of, simply as we can, kind of talk about what a miner is? You know, we talked about that 21 million max. Where are we at right now for mining? How many Bitcoins are still out there?
Sure. So of the 21 million, we're a little over 19 have been mined into existence at present. The next 1.8 or 9, or I don't know the exact number off the top of my head, but those remaining coins, the next 800,000 or 900,000 will come into existence in the next decade, and the next million will come into existence over the next century. So a lot of the coins are already in circulation, and the rate at which new coins are brought into circulation through the process of mining has consistently slowed every 4 years. If you want to call it the inflation rate of Bitcoin, right? If we start at 0 and we go to 50 50 coins, not 50 million coins, the first sort of block of coins, the rate at which we bring new coins into circulation is halved every 4 years. So literally right now, as we speak, every 10 minutes, 6.25 Bitcoin are brought into circulation. But in about a year and a half, that rate will be cut to 3.125. The big difference between that and sort of traditional monetary policy is we have no idea if, the Bank of Canada or the Federal Reserve is going to print $1 billion, $100 billion, $1 trillion tomorrow. And we have no idea what their interest rates are going to be. They're sort of guessing at the interest rates. With Bitcoin, we know with exact certainty what the monetary policy in terms of how many coins will be in circulation or are coming into circulation. We know with precision what that number is tomorrow, the week after, the month after, the year after, the decade after, the century after. And sorry, you asked me about mining as well. So mining, in short, it is the process by which those new coins are brought into circulation. It also, in effect, provides security to the network. It is a resource-intensive process, and that is intentional and worthwhile because it creates a cost basis for the coins. The coins are not created for free, right? With money today, our banks, the central banks, they can create money. It costs them nothing, just control C, copy, paste, away we go. We have new money added to the money supply. With Bitcoin, that's not the case. You have to actually give something to get something.
Yeah, I mean, you think of how much money's been added just in the past 2.5 years to the Canadian, U.S., or a lot of Western, or a lot of governments around the world. Think in the next 100 years how much more money's going to be produced by these successive governments versus 21 million, no more, versus think of the next 50 years how much more money is going to be produced. But you talked about energy, and Bitcoin kind of took a little heat a while ago. Doesn't seem as bad now on that consumption of energy. Can you speak to that a little bit? Like, is that, it's most of it is already mined, so it's getting close to a point where there won't be energy consumed for that. But like, how much energy is involved, or what was the problem with the energy? Why was that such a big deal?
So I would first say that even when we reach the 21 million mark, we are still going to be using energy to maintain, secure, and verify the network. That's not going away, and that's a good thing. And in short, the reason is Bitcoin drives energy efficiency. So what I mean by that is, if you want to mine Bitcoin, your number one cost of mining is energy. So what does that mean? You, as a profit-motivated, businessman who chooses mining as their business wants, you want to find the cheapest energy possible. So where might you find that energy? You would find it, for the most part, not always for the most part, but in a lot of cases, with stranded and wasted energy. And I'll give you an example of that. So there's a practice called gas flaring. When you drill for oil, right, gas is created as an offshoot of drilling for oil. But you typically build the infrastructure to send the oil. That's your bread and butter in terms of where your money's made. The gas is not necessarily profitable, but you're shooting it into the atmosphere as a result of that process. Typically, literally burning the gas into the atmosphere is better and more economical than just venting it into the atmosphere, than just pure gas going into the atmosphere. With Bitcoin, rather than burning it or venting it, you can drop a miner on top of it, and you don't need infrastructure to send the gas anywhere. You just mine it on location. It doesn't matter how remote you are. And you can convert that waste into energy and turn that energy into money. So you are subsidizing reductions in carbon emissions using Bitcoin. Also, another example in terms of stranded energy, windmills, blow at certain hours of the day, not others. Maybe they blow during the day when we're using a lot of energy, but maybe they blow at night when there's not as much demand for energy. And it's not particularly easy to store energy. You can't do that for extended periods of time. So what do you do if you're creating energy? And typically when you build an energy grid, you want to create more energy than you're actually going to need, because you want to be able to service everyone who may need access to that energy. So what do you do if you have excess energy? Typically, it goes to waste. But now you can be paid for excess energy. So it can help sort of stabilize energy grids in a sense as well. It's very, again, and this is part of the proof of work algorithm, the thing that actually secures and verifies the network. And again, it's just that literally tangible relationship from this digital currency to the physical, reality of our world and energy is something that makes Bitcoin very unique and is changing the world for the better, literally.
I can just imagine how efficient governments would be if they tried to produce a currency that needed all this cheap power.
Yeah.
Excellent. Okay, Christina, what else do you want to ask Jesse today?
Yeah, so you mentioned that there's still going to be a job for the miners once the 21 million have been mined. But what will they be doing at that point? Like, what will the job be if there is no more mining to do?
Right. So miners are compensated in two ways. The first way is through the subsidy, right, which is the sort of monetary policy of going from 0 to 21 million, currently at that 19 and change million. But but along the way, they also receive transaction fees. So for every time you execute a transaction, you pay a small fee, and those fees go to the miners, and that's to incentivize them even after all the coins are mined, so that there's a reason to continue providing security to the network.
Cool. So, as financial planners and people who hate paying tax, let's dig into the tax elements. So how is it taxed? How is it taxed in Canada? And is this something you can be buying in, say, a holding company, or should it be personal? Just the different taxation and what to look for and what to look out for.
Yeah, so Bitcoin is treated differently in different places. For instance, in El Salvador, where Bitcoin is legal tender, if I were to go and, again, we'll use the example of buy a sandwich, I would be exchanging 0.0001 of a Bitcoin for a sandwich, but there would be no tax involved because they actually treat Bitcoin for its intended purpose, as money. But in a place like Canada, if I bought, let's say, $10 worth of Bitcoin, and then, let me backtrack. If I bought $5 worth of Bitcoin, and it has since appreciated in value, it's now worth $10, and I were to go and buy that same sandwich for $10, technically in Canada, I'm supposed to pay $5 in capital gains on my sandwich, because we don't treat Bitcoin as money. We treat it as sort of a capital, a commodity asset. So in somewhere like Canada, if you buy Bitcoin for $1,000, it goes to $2,000, and you sell it, you would then owe $1,000 in capital gains. That's typically how it's treated here. That's not how it is intended. It's intended to be money. Anyone can buy it, whether you're a person, a corporation, you have a holding company, what have you. There are ways to exchange, dollars for Bitcoin. There are exchanges that handle that. And then it's on you to actually store and hold on to those coins. I mean, technically the exchanges can hold on to it for you, but that would be sort of defeating the purpose of Bitcoin. Conversely, you can buy something like ETFs. Again, that kind of defeats the purpose of Bitcoin because you're buying it, again, as an example, for $1,000, hoping to sell it for $2,000. You're hoping for appreciation in dollar value, whereas the entire premise of Bitcoin is that dollars are the problem I'm trying to escape from. It is a brand new system of money, completely separate, running in parallel to our current system, and, in my opinion, eating its lunch as time moves on.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Love it. So, okay. So for now, they're going to tax it, and what on the taxation? We pay an awful lot of tax in this country. Is there any fear of long term? How if they'll tax it differently? Is there, realistically, I can't see someone using Bitcoin for a $10 sandwich, claiming the $5 gain. But
yeah,
what are people? What's the fear on the taxation going forward? Or is there smarter ways to do we all have to move to El Salvador? Does that just solve everything, or is there any other taxation things we just got to be aware of?
I mean, yeah, claiming a $5 sandwich would be a lot of work to claim every sandwich or beer you bought using Bitcoin. I think we're still pushing for and trying to gain regulatory kind of clarity on how to treat Bitcoin. It's a little vague right now. I'm not actually I wouldn't call myself an expert or particularly up to date on all the latest developments there. I just know that it is still in a bit of a gray area. They're still trying to figure out exactly how to treat it. The only thing is, Bitcoin is unlike anything they've ever tried to regulate, right? It's not a stock where it's representative of the equity of a company. That company has a CEO and shareholders and board of directors, and they have a website, and everyone knows where to go find information about that company. Bitcoin, there's no, if you want to find out about Coca-Cola, you go to coca-cola.com. If you want to find out about Bitcoin, there's no one place that everyone's like, yeah, you just go here and here's everything you need to know. Bitcoin being what we would call decentralized means there's no center for it. There's no single source of truth. Everyone verifies the truth for themselves. Everyone views it distinctly and through their own lens. And it's up to each individual who uses it to sort of figure out what that truth of Bitcoin really is. So again, I don't want to get too deep on you guys and your listeners here. But I'll just say it's in a very unique situation, and it's very different again from some of these other cryptocurrencies. And I'll use Ethereum as an example again. They have a literal foundation where if you wanted to, let's say, censor Ethereum or say, oh, we don't want it to be available for this purpose or that purpose, you could call the directors of this foundation. You could call the founder of Ethereum, haul them in front of Congress or Parliament and say, we don't like what you're doing. You need to stop allowing this to happen. And you can apply a sort of physical pressure or legislative pressure to someone who maintains a high degree of control. There is literally no one to call in Bitcoin to say, you must stop doing this. I couldn't tell you who to call. There is no one organization or entity that exerts any more control than anyone else.
Which is what you're looking for, right? You want to eliminate the intermediaries. So that is exactly what it's doing what it's supposed to be doing, but it doesn't sound like people are catching on as quickly as you'd want them to be.
It is a system of rules without rulers. right? So the rules are hardened and they work, and you can check for yourself that they work, but no one can change those rules. And so if you think the rules make sense, you can just opt into that and play the game and play by Bitcoin's rules, and away you go. It's a level playing field for everyone. It will not, and more importantly, cannot cheat anyone in the game.
It's pretty interesting. It's pretty interesting stuff. I know. And you kind of, the more you read, the more you want to know more. So then you keep going, right? That's kind of how it works. I do have another question, kind of on the tax side, kind of not.
Yeah.
But from an estate planning side, we do a lot of estate planning, that type of thing. How does this work when someone dies? I know you need your keys and whatnot, but I did also read that a lot of it's missing too, right? Like there's a lot of Bitcoin that's missing. Could that be from people that are passing away, not setting these up in estate plans because people just don't know what to do with them in an estate plan? Or what's your thoughts around that?
Yeah, it's a very interesting question and a very interesting problem to solve in this particular scenario. I guess there's a couple points I can try to address there. In terms of estate planning, it's one thing to hold an ETF. Again, if that's in a registered account or even a non-registered investment account, it's attached to your legal name. It would be included in your estate. The law would view it that way, right? Bitcoin is extrajudicial, I guess, right? It exists beyond the world of laws, of nation state laws. It sort of transcends nation state laws. It simply is this functioning network that's out there. And the way you move or transact with your Bitcoin is, like you mentioned, private keys. So what private keys are, in a sense, you could think of it as your password. I have an email address. If I want to send an email, first I need to use my password to log into my email address. If I want to receive an email, I can give someone my email address and they can send me an email, but nobody can read that email but me because I have the password to log into it. So what the email address is, if you want to think of it as like your wallet address for receiving Bitcoin, that's what would be called your public key. It's something you can give away, right? I can give away my email address to anyone, but only I can read my emails because I have the password. And that also allows me to write emails, meaning I can send those coins because only I have that password. So that's sort of a very quick way of thinking of what private keys are. I won't go deeper on that right now about how they're generated or how you might want to store them and all that stuff. In terms of estate planning, again, because, if I were to pass away, even if I said in my will, so-and-so inherits my one Bitcoin, the law can do absolutely nothing to compel those coins to move. They are completely and totally powerless over those coins. It is completely, the responsibility lies with me to ensure that someone knows how to recover my private key so that they can move it, and I can set that up any which way I want. There are a variety of ways to go about that. It's sort of a private matter, right? It's none of the law's business as far as I'm concerned. And yeah, so it's a bit of a long conversation to go into, I guess, ways of setting it up. But the bottom line is that the coins are in my control if I own the private keys. So long as I ensure that someone can receive those private keys, I can be sure that those coins will pass on to who I want them to pass on to.
I was going to say, it goes back to that personal responsibility, right? Like you are responsible.
Yeah, and just, sorry, Christina, I'll get to your question in a second as well. The responsibility is what separates Bitcoin in a very meaningful way from our current system. If I send a wire transfer through the bank and it somehow goes to the wrong account, I can go and complain to the bank and get them to reverse it, and hopefully, assuming everything's above board, they'll recover the money, they'll send it to the right place, and that's fine. With Bitcoin, there are no do-overs. If I send coins somewhere, once they're sent because the network, again, there's no double spending and all transactions are final. So it is incumbent on all of the users to be diligent and responsible for their money and how and when they spend their money. And then, sorry, Christina, your question, if you could just remind me.
Yeah, I was just wondering if you know about if when passing on that key, whether it be while living or on death, is that gonna trigger taxes? Is that in Canada? Is it gonna trigger taxes like a capital gains tax based on what they're giving on death or living, really?
I think the technical answer is, yes, but I'll throw in the caveat that if it is known that you own coins, if I happen to own Bitcoins and I've never documented that I own them, I mine them, let's say, nobody actually knows in the eyes of the law that I have them. They could be passed without anyone even knowing that I passed them along to whoever I wanted to pass them to. So, again, we get into this kind of gray area where it can operate outside of, nation state law. And it is, in fact, designed to do precisely that. But yeah, taxes are or can be tricky, right? And I certainly, I've sold Bitcoin in the past. I've paid my taxes on it because I'm not looking to, go afoul of the law. But yeah, so it's a little bit of a tricky scenario, but technically, yes, it's supposed to be paid. But that assumes that someone that, the government would know of your holdings, because they're sort of private. They're off book. They're not on a bank's balance sheet. They're on only your balance sheet.
Okay. And that's with them looking at it as an investment versus a currency, right? Because if they were looking at it like money in your bank, you're not going to have those same capital gains tax. You're looking more at like a probate. So it's all in how they're looking at it at the time and where we are at that point in time. And things seem to be changing. So you kind of got to keep up on it.
That's exactly it. If I had just, $10,000 of cash sitting in the bank account, it's not taxed when it gets passed on to my predecessor. It's just, this is the amount of money I have, and here you go. It's not some investment where I bought it for 1 and we're selling it for 10 and we need to account for the 9 difference. It's just, it is what it is. And that's why, when I think of Bitcoin, there is a learning curve and a bit of a perspective change involved with understanding that it's not one Bitcoin is worth $10,000 or $20,000. It's one Bitcoin is one Bitcoin, and there are only 21 million Bitcoin, right? My $10,000, I don't think of it as divided by $1 trillion in the Canadian economy today and maybe 2 trillion tomorrow. We tend to think of it as just the $10,000, but we never account for that sort of denominator. Whereas again, with Bitcoin, you could say, one Bitcoin worth 10,000 one day, 20,000 another day. It's still, I'm passing on one coin, just like I'm passing on $1.
So in the infinite banking world, I go to a lot of these meetings across North America. We talk about sound money and we do all this stuff. And, but my family, especially for been the years now, my teenage kids, it was, oh, are you going to another one of your cult meetings, Dad? Well, I go down to Birmingham and we go to the Nelson Nash Institute and we do all those infinite banking, cash value life insurance things. But Bitcoin kind of has the same thing. This like people call it like it's a cult-like following. And to me that's because people don't understand it really. Yep. But what do you say to those people that say, this is just a cult thing that this is just all these Bitcoin cult-like people do it, but it's never going to be mainstream. Like it's just a cult.
Yeah, people are very passionate about Bitcoin because of how profound the idea is, right? You talk about sound money and having that sort of Austrian viewpoint on what sound money is. If you follow that line of thinking to its sort of logical conclusion, Bitcoin is the soundest money humanity has ever known, and I make the arguments about why in my book. But the thing with Bitcoiners that's very, very interesting is if you ever get a bunch of Bitcoiners in the same room together and they've never met each other, they can all be best friends in 5 minutes because we all have this common denominator that we all just we agree on it, and we agree that there are these certain principles that Bitcoin amplifies and brings out in people. There's an expression, you don't change Bitcoin, Bitcoin changes you. It makes us all very agreeable within a certain bounds, I would say. but we're able to, we all have arrived at the exact same conclusion about this one thing, but we've come at it from our different angles with our different experiences and understandings, but we all have this sort of common denominator. And we all get very passionate about it because we go, wow, like this thing is incredible. If you could only see what I see, you would be as, loud and, obnoxious. I mean, obnoxious maybe not the right word, but you'd be having as much fun and be as passionate about this as I am. And that can obviously get misconstrued, especially online. But if you ever go in person and meet with just a bunch of random Bitcoiners, it's nothing but love in the room every single time, because we're all also very optimistic about the future. Bitcoin gives us, it is, in my view, the single, it inspires more optimism in me than any other movement or invention or technology that I see in this world right now. And again, that it brings that out in a lot of people too.
I think of the line Nelson Nash talks about infinite banking. Once somebody catches it, it's hard to uncatch it.
Yeah.
Once you get it, and that's why I look at Bitcoin. Like the people that get it, there's no changing their mind. There's no. Once you understand it, you're not going to change your mind.
It's like, when you think back to the cartoons, like a light bulb goes off over someone's head. Once that light goes off, you can't turn it off. I know a bunch of people who have had their aha moments with Bitcoin, and once they get it, they never go back, right? It doesn't work that way. It's a very sticky idea in that sense. But yeah, once the light bulb's off, it's just, okay, like I see the world through a whole new lens now, and we can go and do things that we could never do before. And it's very positive, and it's going to lead to a lot of prosperity. It's going to make the world a better place. Like just yes, let's go.
Yeah, you all kind of follow the same philosophies, right? So it's easy to get along with people that are like-minded and being in control, seeing that bigger picture. That's huge. I feel like we've got a lot of that in our business as well with the infinite banking strategy. It's like once you get it, you can't go back to not getting it. It sounds along the same. So Bitcoin's been around for 14 years or so now. It's definitely had its ups. We've seen a few downs recently on what's going on with it. But where do you see it long term? Where do you see it in the next 14 years?
Yeah. So Bitcoin in the past 14 years has only ever done exactly what it was programmed to do, and it has done nothing else. It has just done what it's been programmed to do. So going forward, I expect it to do exactly the same thing that it has done in the past, but people's perception of it, as it has evolved from year zero to it'll be 14 years since the network launched come January. In the following 14 years, I expect more light bulbs to go off, in short. We saw last year, El Salvador made Bitcoin legal tender. That was sort of a monumental change, not because, it's certainly changed the economy, the economic outlook of El Salvador, but it's a bit of a beacon to other countries. It's always difficult to be the first man through the door. You take all the slings and arrows. They have now softened the blow for further adoption going forward, which we're, I would think almost certain to see. And it's not even that it's necessary for nation states to adopt it. Bitcoin adoption is wholly and entirely dependent on just people choosing it as a better means of holding and using money. So I think they're helping set off light bulbs, and we're just going to see more and more people clue in. And that'll be especially in the context of the current monetary system, which is failing us left and right and showing its faults left and right.
And do you think like that we just need more light bulbs to go off? Like, my non-expert opinion on Bitcoin, I was like, all right, 2 years ago, they're going to print unlimited amounts of money. They're going to go. All of a sudden, you've got this fixed thing that's a store of value. I would have expected Bitcoin to skyrocket in the past year or two, and kind of it hasn't. It's kind of gone the other way, and it's kind of followed the stock market, which it really shouldn't. It should, be a store of value.
Yeah.
What is that? Just people haven't truly, as a whole, hasn't truly grasped what Bitcoin is and what it is going forward?
Right. So I would say that, if you were to look at it on a zoomed out longer timeline, for the first decade or 11 or 12 years of Bitcoin's existence, it was very much decoupled from financial markets because it is by far the best performing asset of the last decade, and there's nothing that even really comes close. But now, at its peak, it grew to be a roughly $1 trillion market. Maybe now it's it's several $100 billion worth right now. And when I say the market, I mean just Bitcoin. I'm not talking about all the other cryptocurrencies and NFTs and DeFi. Like, that's all junk as far as I'm concerned. That's a big distraction hoping to separate fools from their money. There are plenty of faults with all that crap. Pardon my French. But yeah, Bitcoin, because of its size, because of its brand recognition, because it's carved out this sort of identity for itself, again, as that money and store of value and this asset, this uninflatable asset, it has, for the time being, become sort of financialized, especially we have EFTs and stuff like that in futures markets. So it has become somewhat financialized and integrated into traditional capital markets. But in my mind, this is a temporary moment in time. At some point, it must break out of that because it will separate itself and prove itself for what it is. And that is something that is very different from any other financial instrument or commodity or asset, or call it whatever you want, that we've ever known. So in the moment, especially, we have rising interest rates, people seek liquidity. What happens? Bitcoin, because it is still mostly viewed as a risky asset, people think, okay, it went up, I'm going to take profits. Throughout Bitcoin's history, it has these big ups and downs and ups and downs. First it's a bubble, and then it's dead, and then it's a bubble again with another zero on it, and then it's dead, but with another zero on it, and then it's a bubble again with 2 zeros on it, and now it's dead, but with 2 zeros on it. And it sort of goes through these cycles where it continually grows an order of magnitude bigger and bigger, and we're in a lull of that period right now. And it's not going to, be the patterns that we've seen throughout Bitcoin's history. They're not necessarily going to repeat exactly the same as they have. But Bitcoin being fundamentally what it is, I have a hard time seeing it just falling asleep and just going along with everything else the traditional markets do for the rest of its life. That seems very, very unlikely in my view.
Thank you. Okay, last question I've got. So for those listeners that have never done anything with Bitcoin, don't really know what to do, but they may be interested, what would you say to those listeners as far as what they should be doing or what they can do?
Yeah, the absolute best teacher in Bitcoin is experience. So doing something as simple as buying $5 or $10 worth of Bitcoin and trying to send it to a wallet and just transacting back and forth a couple of times and seeing the experience of, let's say you buy it at an exchange. Well, when you buy Bitcoin at an exchange, they are holding the coins in your name, right? You don't actually, it's not a bearer asset the way it's meant to be. It's someone else is holding it for you. But you can withdraw it from that account at that business, at the exchange business. If you hit withdraw, what happens is a transaction is broadcast to the network, and usually it takes about 10 minutes to process. And you go through this little bit of anxiety where you hit send, and the coins disappear from one account, and maybe you're sitting on your cell phone looking at, okay, where are they appearing on the wallet that I have on my cell phone? But they don't pop up right away. And there's this moment of, did I do something wrong? Is everything okay? And then 10 minutes later, it shows up. Oh, there's a transaction we're expecting here. You can see, it's on the network. We're waiting for it to be confirmed. And you go, oh, Visa didn't do anything. Interact didn't do anything. Swift didn't do anything. It just happened. I just sent it. I made sure the address was right. This is my address. Boom, it was received. Nobody was in between that transaction. I'm using entirely open source software. Now that it's on my phone, I can send it to whoever I want, whenever I want. There's no banking hours. The bank shut down. We can't do it. There's no, processing, whatever. It's mine. I can give it to whoever I want, whenever I want. So just that experience of actually sending and receiving a transaction, there is so much to be learned from going through that process. So I would, highly recommend, if you're curious at all, do it with $5 or $10 worth. Just see what that's like, and then you can go from there.
Great advice. Great advice. Okay, we could talk for 3 hours about this. You are obviously a wealth of knowledge. I'm fascinated by it. So we'll have you back again. We've got the book is Magic Internet Money, a book about Bitcoin. How else can people follow you, get in touch with you, see what you're up to? What's the best way to follow you?
Yeah, absolutely. I'm on LinkedIn and Twitter for the most part. On Twitter, my handle is JayBerjay. You can also go to my website, magicbitcoinbook.com. There are links to Amazon if you want the paperback, if you want the ebook. I have an audiobook. And also, if you want to, you can actually read individual pages of my book on the website and pay me a few sats worth cents worth, I guess, of Bitcoin per page to read my book. I have an integration there that makes it very, very easy to use. You might spend $15 worth on your credit card to load up a little bit of Bitcoin in an account. But from that account, you can sort of pay per page as you read. So you're sort of streaming me Bitcoin as you read. And then once you're done, if you've only spent $5 or $10 and you want to keep the rest, you can send that Bitcoin to a wallet that you control.
Very cool.
Super
Love
cool.
it.
We'll make sure to have those in the show notes below as well.
For sure.
All right, Jesse, thanks so much for your time. Appreciate it. We'll talk soon.
Thank you very much for having me.
Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.